Hey, good afternoon, everyone. This is Joe Bacella here at Chaikin Analytics, and I'd like to welcome you to how to predict where a stock is headed and create high probability option strategies. Presenting today is Sandy Chaikin, co-founder of
Might
Chaikin
as well take it over
Analytics,
now, right?
along with Josh Midland, head of options strategies at Chaikin Analytics. Now, before we get started, please note that Chaikin Analytics is not registered as a broker-dealer or investment advisor, either with the U.S. Securities and Exchange Commission or with any state securities regulatory authority. Chaikin Analytics is for educational purposes only and is not a trade advisory service. Past results of any trading system or methodology do not guarantee future results. Now, throughout this presentation, please submit your questions using the Zoom Q&A window, which you are able to access in the upper left-hand corner of your screen. We will be available throughout the webinar to respond to your questions. And of course, as a reminder, this webinar is being recorded and will be sent to everyone who has registered. Now, with no prior experience, Sandy Chaikin started investing in 2012 with Chaikin Analytics and built a killer portfolio that outperforms the S&P 500 and most money managers. Sandy presents at Nasdaq and industry conferences on fearless investing. Josh Midland has spent a decade developing and teaching option strategies to traders of all skill levels. Josh currently hosts a three-part series for Chaikin Analytics subscribers involving option strategies that range from simple buying calls and puts all the way up through spreads and more complex strategies. To get us started, here's Sandy Chaikin.
Joe, thanks so much. Josh and I welcome the Chaikin community to our presentation today. And we're basically combining the things that we each do best. You know, I'm good at identifying where a stock is headed, and Josh is great at creating a high probability option strategy for that stock. So you're getting 2 for 1 today. I always like to start with identifying the problem that we're all dealing with as investors. And very simply, the S&P has grown an average of almost 10% a year over the past 20 years, and it's up 10% year to date, ironically, right on target. But individuals have only averaged 2.5%. And why do you think that is? Well, because as human beings, we've got emotions and we're not machines. And unfortunately, particularly with investing, our emotions seem to get in the way, which has a dramatic negative impact on our performance. So the secret is to how to get that emotion out of your trading or investing methodology. And how do you know where a stock is headed? How do you identify whether that stock is going to be going up or going to be going down? And how do you know when to buy and sell? So these are 2 critical questions, right? Where, where's the stock headed, and when do I buy or sell it, take action? When do I take action? And these are typically 2 of the biggest challenges that investors typically face. But today, Josh and I are going to show you how to identify a stock such as Cigna, which we call a classic bull. And we're going to be going through this stock chart in detail later on some similar classic bulls and identify exactly why we're calling this a classic bull. But this is the type of stock, if you're investing for the longer term or even a swing trader, this is the type of stock you want to be in. This is the pattern you want to look for. Now, I bought this stock at that yellow arrow back at the end of November. And at that time, it was 138. And you can see on the bottom here, all of these, green, green, green. That's basically what you want to look for. And we'll address this and the meaning of each of those green indicators as we move into that section. But I just wanted to give you a little bit of flavor. These are the type of stocks, if you're investing for the longer term, you can identify, invest in, and watch them go up over 30% from when I bought that in late November. And what's the point of all this? Well, obviously we like to make money. And when I grew up, it's kind of ironic, but when I grew up as a woman, it was just not considered polite for women to talk about money, how much something costs. I mean, I remember the menus when we go out for dinner, the menus that were handed to my mom and my sisters and myself never had the prices on them. You know, that's how taboo it was for women to discuss money. But obviously times have changed, and it's now okay for me to say the reason I invest in stocks is to make money, and that's okay. And some of that money goes towards our retirement plan, certainly, but some of it also goes into our having some fun, celebrating. We take terrific trips, thanks to some of the profits that I've been making using Chaikin Analytics. And this is only since I started investing in 2012. So why should you listen to Josh and I over the next hour or so? Well, my performance, as Joe mentioned, beats the S&P 500, and by correlation, since 4 out of 5 pros underperform the S&P, I outperform most of those pros. Now, I started investing in stocks in 2012 when we started this company, and I show you some of the performance of stocks that I've been in. Scrolling down to 2007, I'm in Applied Materials, Excelis, Slam Research. These are all up over, 46% year to date in a market that's up over 10% year to date. So these are the types of stocks you want to be in. This is what we're going to show you, and give you a set of really parameters and rules that by following them, you should be able to have these similar types of results. Josh, do you want to speak a little bit to your background?
Sure. So I I've been teaching people and coaching people and working with people for the better part of a decade basically, on how to trade options. And the reason that I was qualified to do that is because I was taught how to do it by people like Mark, by real Wall Street professionals. Mark used to run a trading floor. I'm blessed to be able to work with Mark and learn from Mark while I'm here at Chaikin Analytics. In previous jobs, I've been able to learn from people just like Mark: floor traders, market makers, fund managers, people that ran options floors. And really what my job is here is to take that knowledge that I've been blessed to acquire and pass it along to our subscribers. And so I'm going to hope to do some of that tonight as well.
Thanks, Josh. Josh does a lot of mentoring for our subscribers. He will set up one-on-one appointments with them when they request it, and go over their trading methodology and how to apply the Chaikin methodology to their own personal investing style. So it's he's a huge asset, and he's also a real expert in options.
Yep. And I just want to mention, I've worked with people who do trading on a weekly basis, and people who do investing on a large time frame, 5-10 year horizon, and everything in between. I've worked with just about any kind of style that you can think of, help them to improve and identify how to create high probability, low risk setups. So
perfect. Okay, Josh, thank you.
Sure.
So what are some of the challenges facing you right now? Joe, if you want to just put up, we have a little poll we're going to ask you to participate in and give us some feedback so we have a better understanding of what's important to you. But we've identified some of the biggest challenges that our subscribers tell us they have. And if you'll just check off any or all that apply, Joe can tally them up pretty quickly.
Yeah, let's see. I see there's a good number of people already responding. You can, just as a reminder, you can select multiple options here. So take a moment to read through. I know there's a handful of them there, but feel free to respond to as many as you like. It looks like we have a good handful of people already submitting. So thanks again for participating there.
Right.
Looks like timing is probably going to be one of the biggest ones. Timing and uncertainty in the market seem to be some of the key ones so far. And that's about half the audience having responded with that. Okay, letting great. Emotions getting in the way, a close third.
Okay, great. A poll put up by CNBC said that bad market timing, which is what you all are saying, and poor stock picking were the two main problems for investors. So that seems to follow pretty closely. Emotion, of course, is a big one, and fear. You know, I think emotion is tied to fear. So that's that's always a big one too. Okay, Joe, thank you. Did anything change in the last 30 seconds or so?
No,
Or
I
is
think it was the
pretty
same
consistent?
three. Information overload also was looks like it got a notable response too. So timing, emotions, uncertainty in the market, information overload seem to be the top four.
Okay, great. All right, thank you so much. And thank you all for participating. It's really helpful. Well, because we anticipated these responses, we have geared our presentation to address those. So by the end of this, you will have the tools to overcome each of those challenges. So the 4 steps that Josh and I are going to walk you through today are basically surrounding these objectives here. You want to invest with tools that you trust. You've got to know a direction a stock is headed, whether you're investing for a long horizon or whether you're trading an option. You need to know where that stock is headed. And the when, that addresses the timing issue that many of you say is a concern. When to buy and sell, that's always a big challenge as an investor. And then, of course, Josh will share his knowledge of how to create high probability option strategies once we've identified those stocks. How do you profit from an option trade? So let's start with the first one. First step is that you need to trust a proven methodology, proven tools. If you're going to depend on something, you want to make sure that that methodology can stand up to time-tested and rigorous testing. Well, the Power Gauge rating is the tool of choice here at Chaikin Analytics. And just to give you a brief little overview on what this means is my husband, Mark Chaikin, worked on Wall Street for over 40 years. He created indicators for the pros to use so that they could make better decisions on how to invest their clients' money. He then sold a company that he started. He sold it to a division of Reuters and went into retirement in the late 90s. But after the 2008-09 financial meltdown, Mark came out of retirement because he could see the pain that so many individual investors were experiencing, including myself, of taking control of our finances by taking the money out of traditional brokerage firms and putting it into self-managed accounts like Vanguard or Fidelity. But he said, you guys don't have the tools or the knowledge to know how to manage your money now. With that tremendous distrust of Wall Street at that time, there was a mass exodus, and that was one thing. But okay, so you start your own, you put it in your own fund at Vanguard and say, I'm going to manage this myself. But then, then what? Then what do you do? So Mark said, well, I'm going to take the same tools that I created for the pros, but put them in a way that individual investors can understand. So with that, this is really the culmination of his life's work by taking 200 and some factors, whittling it down over testing to 20 factors that impact the direction a stock is taking, the stock price. And he rolled it all up into an overall algorithm that spits out a rating on a stock of how likely that stock is to out or underperform the market over the next 3 to 6 months. So that's all a pretty big mouthful, but I'll explain it a little bit more as we move on in the slides. But even though that rating looks very simple, very, either red, it's bullish, or green, it's red, it's bearish, green, it's bullish. There is a lot more going on underneath the surface. So what this does, for those of you who cited information overload, this cuts through the clutter. This avoids you looking at charts like you see on the right, which is what the pros would look at, and instead replace that with what you see on the left, which is, as you see, the overall rating for this stock, Applied Materials, back in June, is very bullish, and it still is today. So what this rating is saying, the Chaikin Power Gauge rating, is that this stock is likely to outperform the market over the next 3 to 6 months. And we'll show you exactly how it is displayed on a stock chart. But you can also see that it's broken down into 4 components. And each of those 4 components then drills down to 5 factors. So there's a total of 20 factors that went into this model. And we get a lot of testimonials, some of which, like John Carter, are from partners of ours. John's a very well-respected name in the industry, but he said, you know, there's a lot of hyped up tools out there, but a single tool that combines 20 fundamental and technical factors to anticipate a stock's profit potential got my attention. It's called the Chaikin Power Gauge Stock Rating. At first glance, I thought this looked like an objective, awesome meeting for stocks. And he likes that it includes fundamental and technical analysis for stock selection and timing. So what are those 20 factors? Well, as I said earlier, Mark started with a universe of over 200. And these are the factors that, these 20 that he whittled it down to, are the 20 most important factors that professionals look at every day when they're evaluating a stock. So we basically have the same knowledge that the pros have, but obviously in a very simplified format that is easy to understand. And you can drill down, as you see on the left, you can see there's a power gauge rating for each of those 4 components: financial, earnings, technicals, and expert. And underneath each of those 4 components, you see the 5 factors that make that up. I've highlighted 3 because these are the ones that I feel are most important in evaluating a stock's potential. Other than that, because of information overload, I really look at the overall rating. And if I'm going to buy a stock, I want that rating to be bullish at the least, ideally very bullish. And, you know, likewise, if Josh is going to be trading say a put strategy on that stock, he's looking for the bearish stocks. So it can work either way. You know, either direction you want that stock to head, you can find it by using the power gauge rating. A little bit of kind of reasoning, common sense as to why models beat humans. As I said earlier, you know, we're human beings, so we are tied in with emotions, but models are not. And a well-recognized analyst says here that models beat human forecasters because they reliably and consistently apply the same criteria time after time, as opposed to human beings who are swayed by emotions and opinions. And how many of you out there said you were swayed by emotions? You know, it's a lot. It's hard to deny that that does get in the way, but it does. So all the more reason to depend on a disciplined methodology that doesn't have any emotion. To give you a little bit of more kind of fodder for why you couldn't depend on the power gauge rating, is that Nasdaq in 2014 asked us to create 3 indexes based using the power gauge rating to overlay on the basket of stocks in the large cap, small cap, and dividend achiever indexes that they had. So we did that, and the first one launched in April of 2014, and you can see the performance, cumulative performance since then is the red, obviously in the center of the grid here, but the indexes that had the Chaikin power gauge helping it. In other words, when those stocks were overlaid with a power gauge rating, the Nasdaq Chaikin index weeded out anything that had a bullish or a neutral rating and left only the stocks that were rated bullish. And they aren't changed for a whole year. So that's called rebalance. They're rebalanced once a year. So those stocks stay there, which also speaks to the consistency of a bullish power gauge rating staying in place for a year for the most part. And as you can see here, the Nasdaq index, for instance, on the dividend achievers, if you look at that bottom one, you know, 33% versus 14, that's more than double the performance. You know, same with the small cap, and the large cap, probably a third higher than the benchmark. So all of these got the attention of New York Life's Mainstay Investment Division, and through collaboration with them, there is now an ETF out there in the marketplace that individuals can buy that is based on the power gauge rating. So It's not just us that say this rating has the muscle and is reliable. It's the industry as well is supporting it and using it, as are the pros and many of the hedge funds, as you can see here. So testimonials from our peers are important, but what's really important are from subscribers like you, people who are investing and using a tool. And Norm here says, through following your excellent system, his portfolio now stands in excess of $1 million. Before Chaikin, I would make money and then lose it. Consistent earnings, and there's that consistent again, right? Consistent earnings were just not a reality for me. Chaikin has changed all that. I can't thank you enough for your tremendous service and excellent methodology. So, the consistency is really, as investors, what we were looking for. You don't want to be all over the ballpark, all over the place. So how do we know where a stock is headed? Okay. Most people are looking for stocks that go up if you're investing for the longer term. And if you're looking for a stock that's headed up, this is what we call a classic bull. You want certain parameters to be in place. You want the price to be trending up. You also want that power gauge rating to be bullish. And you want strong money flow and strong relative strength. And I'll explain what those mean on the next slide. But first, I want to draw your attention to this Wyckoff chart. This is a gentleman, a doctor, I think, a PhD doctor, who some 95 years ago created this drawing really to chart how a stock price moves. So, I mean, I come from a retail environment of marketing designer fragrances for Elizabeth Arden and L'Oreal, and those prices of those fragrances, for instance, were set, and they typically would change in maybe 6 months or a year, but certainly not in a day or a week or a month. Well, obviously that's different with stock prices, as we all know. They're kind of all over the place, but they're all over the place has a pattern, and if you understand the pattern, it will really help you with your timing. And I know timing was like the biggest concern you all have. So understand that this is the way a stock price moves, and you will see the pattern on chart after chart. But I mean, I kind of don't go with the Wall Street jargon. I just say this is a zigzag pattern. It kind of, goes sideways for a while. It pops up, comes back again, goes up again, goes sideways, spikes up, pulls back, goes up again. So if you're aware of this kind of pattern, you will look for it and see it, and that will help you buy, say, when it's pulling back, and help you sell when it's going up or spiking up. And that has a huge impact on timing. So let's look at an example here of Lamb Research, and I tend to use examples of stocks that I'm in or have been in. So I'm showing you real world examples, and my exact performance of when I got in and when I got out and why. So let's look at this in detail. So the first thing we want to look for a classic bull is the price to be trending up, and you can see this orange line kind of smooths that out. It's a 200-day exponential average, whatever that means, but it's a 200-day average. It's trending up. That's good. So that's the first criteria. The second criteria is we want the power gauge rating to be bullish. You can look at this ribbon along the bottom. This is a 5-year view, a 1-year view, excuse me. We also have a 5-year view, but this chart shows you a 1-year view. And you can see that the power gauge, for the most part, with a little exception last May, has been bullish. Relative strength is the next indicator here. And you can see by this green heat map, that means this stock is outperforming the S&P 500. You can see back in May, it was underperforming the S&P 500. Well, why is that important? Well, most investors, myself included, compare our performance results to the S&P 500. That's just kind of like the barometer. If you're looking for average returns, and I do have a portion of my investments just in an S&P 500 index fund, But if you're really risk adverse, the best thing I think what I would do is put it into an S&P 500 index fund. That's going to get you 10% a year on average, and that's been the average for the last 20, 30, 50 years in that range. If you want outsized returns, like you saw in that Signet chart, or as you can see on Lam Research, this stock's up over 50% year to date. Then you're going to want to pick individual stocks, and then you're going to need to know where that stock is headed. And you're going to look for the pattern that I'm going to show you here, which is going to steer you in the right direction of stocks that are going to outperform. So the first, a critical part of that is that this stock needs to be outperforming the S&P 500. It needs to be doing better than that 10% average return. And by being green, you can see that it is. Part of that other criteria was money flow, Chaikin money flow. Well, what does that mean? That is a indicator Mark created, 35, 40 years ago when he was on Wall Street. And what that does is it tracks professional money coming in and out of a stock. And that's important because the pros trade in the volumes that move the prices. So when professional traders are selling or buying, they're buying it typically in huge quantities. And because the stock price moves based in large part on supply and demand, that can really impact the price of a stock. So you can see here when everything else is green, for instance, these little periods of red money flow mean that the pros are selling. And that typically correlates, everything else being equal, typically correlates to a sideways move on the price. You can see once money kicks in and everything is green, then you really get the price moving up. And you can see the pattern here from that Wyckoff chart, little zigzagging across, it pops up, it pulls back. You want to buy it on these pullbacks. You want to sell it when it's spiking up like that. And this overbought, oversold, which is where the circle is on the bottom right of your chart, helps you identify that. This is basically taking the Wyckoff chart and breaking it down for you. So these peaks up are when you want to be selling it because that correlates to a higher price, as you can see here. And these dips down, that's when you want to buy it. And all stocks go through this natural rhythm. So being aware of the rhythm of that Wyckoff chart, which is what the overbought, oversold indicator will do, for you, kind of smooths it out. It's really critical to help you with your timing. So you see here the green arrow with this little green triangle correlates to when I bought this stock back in February. Now our system has 6 sets of buy-sell signals, and these help you enormously with timing. So a triangle here is an alert from our platform saying, hey, this is the money flow. There's a lot of money coming into this stock right now. That's a good thing. You might want to be aware of that. Well, if the pros are putting a lot of money in and everything else is equal, as it was with the power gauge rating being strong and the relative strength being strong, and it in what we call an oversold condition, which is this little pullback here, correlates to this dip, that's like everything is in my favor to buy this stock, which is what I did. I bought it at 117 when I got this buy signal right here, saying there's a lot of money coming into this. Now I sold it 5 weeks later at this yellow arrow, and that was because I took the profit. One of the things I've learned is to, take those gifts. When something spikes up, it tends to pull back and take that spike as a gift. Well, the spikes are easily identified by going above what we call the volatility bands, which are these white kind of zigzaggy bands right here. And when a stock trades outside of that band on the upside, that can be a really great time to say, wow, this is unusually high for this stock. It's outside its normal, range. This might be a good time to take the profit and say thanks very much, which is exactly what I did. Likewise, if a stock price falls below this lower volatility band, that's a good time to say, the stock could be breaking down. It might be a good time to just, take a small loss and get out of this stock. So that's really how I read this chart. And by the end of the hour here, I think you'll be as versed as I am in reading this chart. So let's, I had to spend a lot on that because it's the first, but the rest will go a lot more quickly. Okay, so here are my rules of when I sell. It hits that volatility band as it did in March on Lam Research, and I sold it. It's overbought, meaning that price is dipping down, or you get a spike after strong earnings reports. There tends to be a lot of volatility around when stocks report earnings every quarter, and when they beat analyst expectations, the price tends to spike up. And that can be a good time to take your profit as well, because typically it pulls back a little bit from that. So I bought this stock again, okay? I sold it, as you saw, back in March, and then I bought it a few weeks later when it dipped down to 126, which was lower than what I had sold it for. But I noticed that they're reporting earnings, and you see this, the green EPS on here. That means that they beat earnings, the analyst estimates, when they reported their quarterly earnings. And it will give you a little, our platform gives you a little window up here saying this stock is reporting Wednesday, July 26th, which is next week. So it's giving you a little bit of a kind of a heads up that could be a good time. If they've had a strong earnings pattern of beating analyst estimates, that could be a good time to bank on volatility, which is exactly what I did. So I bought it back down here, April 17th, when it was dipping down. Again, it correlates to this oversold condition. Everything else was green. And I sold it literally 3 days later for another 10% profit. Having made 9% on the first trade, a month earlier, I then made a second trade and took a profit of a second 10%. So these little 10% trades can pay off. But I took it because, again, it went outside that volatility band. It spiked up 10% on earnings, and I thought that looked like a good opportunity to take the profit and be happy. And one of the things that gave me confidence in this was looking at this 5-year view. So here's a 5-year view of Lam Research with the earnings overlay. And you can see by all the green, this company has beat analyst estimates since 2013. That's 4 years. And I don't know what happened before then, but 4 years of strong beats was good enough for me to have confidence this past spring, that they were going to beat again. And I also pulled down for you the earnings component, so you can see what the power gauge rating is saying on each of those 5 factors. So the earnings component for Lam Research is still, this chart was taken today, is still very bullish. So let's go to another little poll for you guys. You tell me, and Joe, if you can put up the next poll, whether you think next week, when Lam reports their earnings, do you think, based on what you're looking at, that they're going to beat or miss the estimate? And Josh, if you can just put up that poll.
Yeah, let's see. Bear with me for 1 second.
That's all right.
Just having a little bit of a technical issue.
Oh, okay. Do you want me to move on? Because we do have other polls that we can.
If you don't mind, I'm sorry about that.
No, it's not a problem. No problem.
I'll give my answer. I think it's going to beat.
Okay. Okay. Well, how about if you all just go into your Q&A box and say,
there you go.
how about that? And just say beat or miss. And then Joe can tally it from there. How about that? And while he's doing that, I'm going to turn this over to Josh to chime in on an option strategy for Lam Research.
Yeah, so I looked at the options for Lam Research currently, and unfortunately they were they were okay. They weren't amazing. I like to take higher quality options opportunities. With earnings coming up, you might take a flyer so to speak. That's a technical term. But what I did notice is, right, so maybe there's a cheap option out there you can find just to play the earnings, because it looks like it would have good earnings results. But what I did notice is we talked about this, Sandy, a month ago. Sandy and I presented a month ago in the middle of June, and this was an example that we use as a potential idea. So what you see on there is an options play overlay. The window there that has the 3 different scenarios on it is a fully integrated options tool that we have in our platform. You can see I circled the little options button right at the top of the screen there. So I just click on that and it puts these wonderful option ideas in front of me, and it enables me to quickly and easily hone in on a great idea. So I looked back at what we did and I put a yellow arrow at where we pulled up this idea. This idea had the potential to give you a 150% return for your risk. And sure enough, had you taken this, it would expire tomorrow and you would be, if you're still in it, if you took it back when we said it on the 15th of June, I believe was the date. Yeah, 6/15 was the date, and you had taken that trade, you would have realized, if not all of that profit, really, really close to it. Kind of worked out perfectly. So I thought that was worth showing. This all came from a repeatable system. It all comes from a repeatable system. We'll show you more and more of that. So all I did was I looked at Lamb Research back when Sandy and I were talking about it a month ago. I pulled up the options. I went through my rules, which we'll talk about shortly, my options rules. I went through
them. The rules?
Oh, perfect. Next slide. And
okay.
I found the trade, and it was a great trade. So one of the things that I do is I use signals to help me identify my entry price. Right before Sandy and I did that presentation, there was a buy signal that came up. So that's great. The second thing I use is those volatility bands. Those volatility bands, I use them as GPS for my strikes.
I'll go back so you can see those volatility bands are these white polka dot things.
The white dots on the going across the chart. They're proprietary volatility bands that Mark developed, and Mark designed them to give you the expected range of a stock. And so I find them to be great. I use them for all kinds of option strategies. I want to know where to sell my covered call. Let me see where the volatility band is. I want to know where to sell my cash secured put. Let me see where the volatility band is. I want to take a call option on Lamb Research, and I want to have a reasonable target. I don't want to be too greedy, because you don't hate greedy targets, and I don't want to be too conservative because I don't want to leave money on the table. Hey, great. Let me see where the volatility band is. And sure enough, look where we got to. And it happens so often that I could show you a dozen of these, but we happened to show this one to people a month ago, and I thought, let's do it again.
Yeah,
so
that's great.
Those volatility bands, GPS for your strikes, they're fabulous. They really are very helpful for me. Then I use the overbought oversold indicator. That also helps with entries and exits. And I only want to pick options with good risk reward. And so we'll talk a little bit more about that as we move on. But those are my general rules for options trading, along with Chaikin Analytics. So you can see we got to the upper volatility band here. And you'll see the green arrow in the bottom there shows that the overbought oversold oscillator, which is it's a proprietary stochastic that Mark developed, it really does help catch the ebb and flow of a stock. Like Sandy said, they don't move in straight lines; they zigzag, and so we have a nice smoothed indicator at the bottom to help you understand when they're zigging and when they're zagging. So,
exactly.
So this one had zigged up. And
that's the technical term. Zigged up.
Zigged up. All right, well, there we go. And that would be the point to get out of the the trade at that one. So all right, Sandy, we can move on.
Also point out that what Josh doesn't have to do is he doesn't have to calculate all these different scenarios. The options play does it for him and scores it. So the 100, it's already telling you, hey, this is what you should zero in on. This is the one with the highest probability. Is that right, Josh?
That is right. That score takes into account your risk, your reward. It takes into account a lot of factors, but some of the primary factors that drive that score is risk, reward, and your probability, your odds of success. And so that's suggesting that we had good risk, good reward, and good odds of success. And who doesn't want trades like that constantly? So that's absolutely right. And you're absolutely right. You don't see the calculations on here. This tool, the options play tool that you see, has a lot of calculations it does for you. It calculated an expected move profit for you. You can see where I circled in yellow. That's the profit if it makes the expected move. I used to scribble and scratch on notepads to calculate my break even and all kinds of things, what my probability of profits were. It all just does it for me. And I can modify it. So if I decide that I want to go deeper in the money or farther out in time or out of the money and closer in time, there's a modify button on there that you can see, and you can go and tinker with it and it'll update the score for you right there in real time. It'll do all the calculations for you right there in real time. It's an amazing tool. Even for an experienced option trader like myself, I find value in this tool every single day.
And when Mark saw this and met with the options play people, he said, "Oh my God, this is better than anything we could ever create. There's no reason for us. We were going to create something similar, but there's no point in it because this tool was so phenomenal." So
yeah. Yep. It's great. It cuts down on time. Time is more than money, people, I think. I mean, money comes and goes. Time only goes. So
good point. And here's one of your subscribers.
Yeah, Mark, this is so he has a 90% average return in his first 6 earnings trades using the options play and the earnings feature. So it's a combination of our Chaikin Analytics earnings feature and the options play tool that you just saw. He's still using a ledger the way that I do it. I guess I'm told I'm a young man, but I still scribble and scratch a ledger down like that. So. But what he's doing is and he says it right here, simple trades, process fast and efficient. It cuts down on all of that time spent trying to figure things out and calculate, and quick and easy process to make money.
So instead of getting bogged down in analysis and scribbling, he was trading and making money. So that's pretty cool.
Yep.
Okay, so great. That's great, Josh. Thanks.
Sure.
So what do you buy? I pointed out Lam Research for you, Cigna, for example, another stock that I own, which I mentioned in the beginning. How do I find these stocks? Well, there's a couple of ways. There's basically 2 ways that I depend on. One is Mark issues every Sunday night something we call Market Insights, which is a commentary he puts out on the market, what has happened this last week, what he sees going forward, and he always has specific stock ideas. And it's really like gold to our subscribers, and the subscribers who have followed his advice in the 3 years that he's been writing this have really done very well, including myself, because I read it as Josh does too. So religiously, exactly.
Religiously, every week.
So back in April, Mark focused on 2 bullish, he calls them stocks of the week, Excelis and Entergis, and I put them on my watch list, and shortly thereafter bought both of them, as a matter of fact. So on Excelis, which you're seeing here, I waited till I got this nice buy signal. Again, I got this money flow buy signal, which you can see right here with the yellow arrow on it. And everything else was lining up with this stock. And I bought this couple of days. I mean, I put it right on my watch list, and like 2 days later, I get this buy signal. It's oversold, strong power gauge rating, strong relative strength, a ton of money coming in, which is why it triggered the buy signal. So I said, well, I'm in. Bought it. Reported earnings. You see how it spiked up 10%, pulled back a little bit. You know, this could have been a good place to sell up there because they typically do pull back. But then it went up again. And when it up past that upper volatility band, since that's one of my rules of when I sell to take a profit, you know, I sold it up here and I took like a 34% profit in 2 months. It's very successful trade. So there aren't any options on this particular stock for Josh to share with you, but the point I want to make is that Mark gives great stock ideas, and I'd say about 70% of the time they're right. I mean, nobody's right 100% of the time, but 70% is darn good. So another way that I find stocks is using our screener, and we can plug in criteria. I've plugged in what you see here. I want stocks that are in the strongest industry groups, because the research shows that even weaker stocks in the strongest industry groups tend to outperform even the strongest stocks in the weakest group. So go with the strongest groups. And you probably heard on CNBC a lot about medical, technology. You know, these are some of the strongest industry groups right now. And you want to go with the wind in your back. Go with everything in your favor. By selecting the strongest industry groups, it takes the universe of 5,000 stocks and gives me only the top 20% industry stocks in the top 20% of industry groups. And there's like 64 industry groups. So, you know, it gives me, say, the top 12 or 15 industry groups and culls out the rest, which is great. I want a power gauge rating to be at least bullish. And remember, I told you that there were those 3 factors that I felt were very important in moving a stock price. Price to sales, short interest. I don't want the short sellers selling something I'm buying. They tend to be the smartest guys on Wall Street, so I want this to be strong. And I want the insiders to buy because, I mean, who knows more about a company than the insiders? So if the insiders are buying, this will show as bullish. That's a good thing. They're only going to buy because they think the stock will go up. They may sell because they need money to buy something else, but they're only going to buy their own stock because they think it's going up. So I want them to be buying. If I'm going to be buying their stock, I want them to be buying it too. And of course, our classic bull parameter was we want money flow and relative strength to be strong, which you see here. And I tend to focus on the small and the mid-cap stocks. They tend to be more volatile, and I can realize a higher price, as I did with Excelis, for instance, small cap stock, up 34% in less than 2 months. If you're trading options, you may want to switch this to like a mid and large cap stock. But in any event, let's look at running this screener yesterday in preparation for today. So I ran it. I started out with a universe of 5,000 stocks, and literally in 30 seconds, I have these 13 in a list, which I can then save to my workstation, which I've done here. So you can see the 13 stocks or 12 on the left, or what the screener found for me. So it's pretty amazing. And when you think about time, you know, many of you said information overload. You know, this is the answer to information, the antidote to information overload, because literally in less than 30 seconds, I take 5,000 stocks and get to 13. So I highlight JALT because then what I would do is run through each of those stock charts. Anything that looks interesting to me, like JALT, this has a really nice setup for me. You can see in May how everything's switched over, you know, from neutral to negative to positive, and look what happens when everything turns green. I mean, this is the best example of does the power gauge work? You know, you just look at it. In May, is this telling you that this stock is likely to outperform in 3 to 6 months? Well, yeah. I mean, it is outperforming in 3 to 6 months. Here in January, it goes neutral. That's reflective of this flat price. And back in here, in earlier of 2000 or later 2016, you can see that this stock had a nice move upwards when everything was green, but kind of went to a screeching halt when everything turned neutral or bearish. So, I mean, these indicators really do have predictive value. If you don't take my word for it, just look at any stock chart, and you'll see it for yourself. So, saving time. You know, who isn't stressed out by not having enough time in the day to do what you want to do? So, you know, the power gauge rating and the workstation in general, particularly the screener, can really be the antidote to information overload and researching time. So, Josh, I'm going to turn this over to you now because you can share with everyone, how to identify if a stock is headed in a downward spiral.
Sure. So I play both sides. I skate both directions in the market. And one of the things that I look for are stocks that are classic bears. They're just likely to keep going lower. And what we look for in Chaikin Analytics is first that power gauge rating is bearish. It's the first thing I want to see. Is the power gauge rating bearish? That's a quantitative model at your fingertips. There's a reason that hedge funds hire people like Mark to develop quantitative models. It's because they're valuable. All right. So power gauge rating bearish. That's the first thing I want. I want the price trending down. You'll see there's a gold line going across the chart. That's a long-term trend line. It's a double exponential 200 period trend line. Don't have to worry about what that means. Just understand it's a long-term trend line. I want that sloping down, the trend going down. Then I want to look at money flow and the relative performance against the S&P. Money flow tells me what the institutions are doing. Institutions are the ones that move the market. I mean, I sure don't move the market. If any of you out there can move the market with your order flow, you should let me know that.
God bless you, right?
Yeah, I'd like to be your friend. So it's the institutions that move the market. And so I want to know that the institutions are unloading, that they're creating a lot of supply. All right, when supply exceeds demand, things go down. So when institutions want to sell, they create such a supply that it drops. And the Chaikin money flow, it's on every one of your brokerage platforms out there. It may not have the word Chaikin on it because they might have changed a word, one thing in there, so they didn't have to call it Chaikin. But that money flow, Mark invented it 35 years ago. It's on every platform. Every platform has it. We include it here. And then the relative strength. Relative strength tells me what's going on right now. Is it outperforming or underperforming the S&P? The S&P is an average, and some things are going to be above average and some things are going to be below average. And if I'm going to be taking bearish trades, I want to be in something that is already below average. So this tells me that the institutions are selling. It is currently below average, and the power gauge tells me it is likely to continue to be below average. That's a classic bear. You'll see we have advanced auto parts in the upper right-hand corner as a pattern. Oh, yeah, we'll get to advanced in a second. But just to recap, this is the Wyckoff pattern that Sandy talked about, and it's the same on the way down that it is on the way up. And on the way up, you have accumulation and then a move up and then what's called a throwback. Here, you have it the other way around. You have a distribution, and then you have the breakdown. Then you have that pop, which is where most of my trades I look for. And then you have what's called markdown, and then redistribution, breakdown again, and rinse, repeat. And that's what the institutions do constantly. They follow this sort of distribution and accumulation pattern. So this is the breakdown distribution pattern that we're looking for. So let's see on the chart. We have just that. You have a basing, you have a breakdown, you have a little bit of a throwback, you have another breakdown, you have a basing, you have another breakdown. Now, on April 9th, Mark, in his weekly newsletter that we have referenced already, and that comes included with a subscription. Everybody who's a subscriber to Chaikin Analytics gets a weekly newsletter from Mark and a daily morning insights letter from John Schlitz. He's our chief market strategist and an overall fun guy, I should say. And on April 9th, Mark had written up the auto parts dealers. So Advanced Auto Parts, O'Reilly, and AutoZone were the three that he mentioned. So this is Advanced Auto Parts. I don't have time to show you all three. All three of them worked out tremendously well. But we just picked out this one. And you can see not too long later, what do we get? Sell signal. Nice sell signal. Follow the signals. Yeah. That circle right around there. Yep. Yeah, you can see the little red triangle in there. I'm not great with the drawing tools, but I'm learning.
You got it. You got it. It's on there.
It's on there. All right. Yeah. And so you can see, and look where that sell signal is, and then look what happened. And I see Kerplunk. I see this quite often. This happens a lot. I'd say those signals probably, you'll see something, you'll get success with those signals, I think about 70, 80% of the time is what I've come to find. So nice signal. Perfect entry point, overbought at the time. Everything else looks terrible. I mean, look at the money flow. You had to ignore that little bit of green. Generally speaking, look at all the money coming out of it, right? Don't get distracted by the green. Look at all of the red. It's a sea of red with one small little island of green. It's a sea of red. Institutions are unloading this thing hand over fist. And we just have the right tools to be able to understand that and take part in it. So get the sell signal, off we go. And here's the clip. We clipped the Market Insights newsletter. You can see on April 9th, he wrote up Auto Parts, AutoZone, and O'Reilly. And all of them would have been great trades. This one happened to have a nice sell signal. You can see right there circled in white, and then the move. That's what followed on poor earnings. So that's what we look for in a classic bear. That's the sort of setup that we look for. Now, a month ago, I talked about classic bears again, and in that time, I used Apache as a potential trade. And so this is what I showed on June 15th. In Apache, and you can see again I've got the circled is a picture of options play. I have some of the other details. This is just a different view in options play. We teach you how to use it, but you can see the trade details and the expected return if you made your expected move right on the sell signal. So that is the picture from 6:15. Now what I did was I took a picture from today and I kept the yellow arrow on there to show you the entry. And the second yellow arrow now shows you the result. Look at that. We got that sell signal. A couple days later, kerplunk. I mean, for those of you that like to do short-term trading, if that's not short-term enough for you, I don't know what is. So, I mean, that was a quick move. We dropped about 10% in a matter of 3 days, 4 days. From the time that I mentioned it to the bottom there, took about a week. 1 week in an options trade. Now, just as it happens to be, when I pulled this up today, another sell signal showed up. And so I went to options play. And I pulled up the options play. And what did I see? I saw a great score. I saw a great return for what I'm going to risk. And I said, wow, rinse, repeat. Let's do this again. So I took a put position on this today. I took a bearish position on this today, and I expect it to work out just like the other one did. So here's a way where you can easily identify bearish trades and take advantage of moves lower. And if you look at this picture, you'll see it exhibits all the characteristics that I just spoke about in terms of the classic bear. We have a bearish power gauge. In fact, this is a very bearish power gauge. It's the worst of the worst. It's not just bearish, it's very bearish, and the very bearish underperform the S&P by an even larger margin than the bearish ones do. Now, we also have terrible relative strength. The money flow, although it's peaked up a little bit recently, again, has mostly been a sea of red. And so I've got a lot of confidence. And the score on options play tells me that I have good risk, reward, and odds of success. So off I go. We'll see how it works out. I'm very confident.
Do we have that little poll to put up on this? Or actually, I think we went to...
Maybe on the next one.
Yeah, it wasn't this. Sorry, it's the next one.
Well, we'll get to the next one.
Yeah, okay, I'll let you read this. Sorry.
It's okay. We got so much good stuff for him, Sandy. It's hard to keep track.
We get enthusiastic, yes.
we do. I know. Well, it's fun. It's so much fun. I love doing this. And again, I have a process just like Sandy does. It's a process that takes me about 15, 20 minutes in the morning, and off I go. Right? And that way I can talk to subscribers all day and work with them and put together good content for everybody. Anyway, Torsten wrote in. He's been taking sort of the style of trades that I'm showing, and he's had great results. This was within 2 weeks. Now, I'm not saying within 2 weeks you can expect to have this sort of result, but this is what we expect from our subscribers, to receive these kind of testimonials, to see great returns from our subscribers when you follow the system, when you take the high probability, low risk, high reward opportunities that Sandy's been showing on the bullish side and I'm showing now on the bearish side. You have consistent success. Consistent success. That's the thing. Consistent success, because it's all done in a formulaic way. So that's from Torsten, which I'm very happy to hear from him. Next up, How do I find? Oh, yeah, let's just review my rules real quick. I forgot I plugged this in here. I just want to make sure we review them. So again, I'm using those signals to help me identify an entry price. I'm also using the volatility bands, not just to help me with entries, but to help me pick those targets out, right? How did I have an understanding of where Advanced Auto Parts was likely to go, or Apache? The trade I took on Apache, where did I think that was likely to go, and how did I understand that? Again, I use the volatility bands. The tools are so helpful, and it's just right there in front of you all on one screen. It takes me really 30 seconds to glance at a stock and understand if it is something that I like or don't like, just like that. Saves me a lot of time. I use those overbought, oversold indicators to help me time with exits. They help me understand when things are going to zig and zag. And again, as I said, I only want to pick options with good risk reward. And I have a tool that helps me do that as well. And you put it all together, you have a nice, easy, quick system to go execute trades. So let's look at how I find some of my ideas. Much like Sandy does, I read Mark's newsletter for ideas. But another way which I generate ideas, much like Sandy does, is through the screener. So I went into the screener and I picked out, now I did this a little bit slightly differently. Sandy looked at only the top 20% in terms of performing industries. Thank you. Yeah, I did it slightly differently. I looked for industry groups that were underperforming, which gets you similar results. Honestly, it's just a different way to kind of take a slice at it. So I looked at all rated, every stock we have a rating for, and then I looked only for the bearish ones, only for the ones that are in an industry that's underperforming, so they're in a below average industry already. And much like the above average industries tend to get the worst stocks in above average industries outperform the best in the below average ones, flip that around for this. If you're a poor stock in a poor industry, oh man, that's a stock that's highly likely to go down. So then I just look down. Overbought helps me with timing. Helps me understand when things are a little bit lower. It also is likely to have a signal pop up. You can see there's even a signal on Chevron that popped up. And I used our classic bears, money flow and relative strength. And then finally, I used a beta because some of the things for options, as Sandy alluded to earlier, sometimes it's hard to find either narrow spreads or stocks with options on smaller cap stocks. And smaller cap stocks tend to be the ones that are bouncier. That's another technical term for you.
Very, very technical.
Yeah, very technical. They're a little more volatile. And so this is my way of getting at stocks that are a little more volatile, but that may be a slightly larger cap stock. So I ran the screen and it spit out 11 at me, which is a nice, easy list to go through. And I went through the list, and you can see I've circled, it's my bear option ideas. I put the date on it so I know exactly when it is. And what I'll do is I'll go through this list. I mean, I went through this list, but what I do on normally is I go through my list and I do what Sandy does. The ones that are look appealing right now, I take the trade now. And if they look like they may be soon and sort of meet my style, I put them on a watch list. And then they're there and they're nice and easy. Today, I happen to notice there was a, I always go to the sell signals first, so I always click on those first. So the second stock I looked at today, Schlumberger, said, hey, look at that, a sell signal at the upper end of its volatility band. That sounds great. Let's look at the options. Sure enough, 122 score. That's nice. Great return. Look at the potential return. And I'm not suggesting that I will actually achieve that number, but you shoot for the moon, you reach the stars. No, wait, you shoot for the stars, you reach the moon. That's the way it goes. Shoot for the stars, you reach the moon. So I expect I'm going to have quite a good return on this just the same. And I took this trade today also, because I really like it.
This research for our presentations can be very profitable, can't it?
It can.
Gives us some new ideas.
Yeah. Well, when we do, the best thing about doing these presentations is really I get to share what I'm already doing. You know, I'm already doing this on a regular basis. I would have come across SLB this morning or tomorrow morning anyway, and I would have seen the signal, but I get to share it with folks, and it makes me happy because I think it is valuable and it is profitable, and my account is growing thanks to Chaikin Analytics, and it's because of being able to quickly and easily identify trades like this and have the confidence to take them. And I have the confidence to take them because it works repeatedly over and over and over again. So Options Play did all the calculations for me. I said, hey, that looks great. The signal right at the top of the upper volatility band, classic bear. This has risen on weak money flow, which is a very bearish indication. You'll see the last move up in July, if you're looking at the end of the chart there, right below the signal. Yeah, thank you, Sandy. That move higher happened on negative money flow. Everything else is red. When everything's red, the likelihood, the high probability, low risk trade is lower. Oh man, I just gave the answer to the poll question, Sandy.
That's all right. This stock is reporting July 21st.
I know. I noticed that as well. That's tomorrow. That's tomorrow.
The sun means it's the morning. So do you want to ask your poll question now?
Sure. So based on what I've just shown you, do you think it is likely that this stock is going to go higher or lower on earnings? And hint, hint, I show the earnings, Chaikin Analytics earnings metrics at the top there, so you can get a better sense. But please chat in.
So we've got, just to clarify for the poll here, we have two different responses. So just as Josh mentioned, you think it's going to go up and would you buy a call, or do you think it's going to go down and buy a put?
Which would you do?
It's pretty one-sided right now. Josh, I think you make a pretty hard argument.
I gave away the answer before I asked the question.
That too.
Guys, the answer is 2. What's 1 + 1? Anyway, so well, good. Hey, people are following along.
What are you seeing? What are you seeing in your poll?
It is entirely one-sided. About 50% of the audience has responded. Everyone has said buy a put. Buy a put.
This is great. I mean, this just shows how clear and concise the information is, that it can lead you to make a decision very quickly.
Yeah, and it cuts down a lot of time. I mean, the Options Play score, 100 is a good score. Above 100 is a good score. It gets a green circle. You'll see that the one next to it's yellow. Between 80 and 99. We explain all this to you anyway when we do our onboarding process. We have a whole team that helps you learn all this and get up to speed very, very, very quickly. Just to be clear, I did a debit trade on this. Someone asked if I did a credit or debit trade. That's a great question. I did a debit trade. So I went with the debit side of it with the puts. So and there you go.
Oh, so, you know what? We had this earlier. Norm.
We did. One of the things that I wanted to highlight again on it is that before Chaikin, he would make it and lose it. It was a revolving door. And one of the questions that someone just typed in is how to know when to get out. Right? How do you know when you're wrong? How do you know when to get out? And that's one of the things that really helped Norm go from make it and lose it to make it and make it, right? Which is really where you want to be. Not that you win them all. I don't win them all. Mark doesn't. No one's right 100% of the time, but it's about being consistently having more winners than losers and having bigger winners than losers. And that's how he made it all the way up to his million. But what I really wanted to hit on was the then lose it. And what we've helped Norm do is avoid losing it. And that gets to understanding when something is not going your direction. So let's talk a little bit about knowing when to get out and some of the signals. Sandy, why don't you talk about the signals?
Okay, great. So the signals, as Josh and I have been pointing out, will trigger either up or down when certain criteria is met. And you can see the 6 types of criteria on the left there. Those are the 6 pairs we have, as well as the oversold indicator, which is that zigzaggy indicator that we've been highlighting as well. Well, how do you find them? How do you know if the signal has been triggered for a stock on your watch list that you're waiting for the right time to buy, or a stock on your own list that maybe you want to take a second position on, or maybe it's starting to break down, and if you get a sell signal, you want to know about that. Well, we have what we call an alerts view, which is this little yellow bell here that says 11, and you can overlay this on any list. And like Josh, I have a list of stocks that I own, which I call my stock list. It's typically 8 or 10 stocks at any given time. And then I have a watch list, and these are stocks, you know, like like Jout, that I come across in my screener or on Mark's Market Insights, and I put them on a watch list and wait for the right time, or wait till I have money and the right time. Well, when Josh and I presented this webinar last month, June 14th, I ran the alerts view on my watch list and highlighted DHI, which you can see had a price of 34. Well, let's see where that is today. Today it's up over 30, almost 37. It's up 8% in the last 5 weeks. And you can see this is the triangle here where that money flow buy signal triggered. So unfortunately, I didn't buy it back in here, but if I had, I would have realized a really nice gain. I probably would have sold it up here when it hit this upper volatility band, but this stock also reports on Wednesday. And one thing I want to point out that is helpful as well is we've added recently this news. So at the bottom of each stock chart, and you can click here to get more stories, but there are news stories. So you don't have to go to Yahoo Finance or Nasdaq.com to see what the analysts are saying about a stock or what's happened with management in a company or whatever. But you can see here for this stock, the price target's been increased to $42. The stock's at almost 37. So you could drill down, read that article, see who is recommending it is going higher. And that also can give you some confidence before you pull the trigger. So just, you might want to put this on your watch list as well, because this stock reports July 26th. The overbought, oversold indicator, as we pointed out, is a really helpful way to identify timing. However, if you're trading or buying a stock before it reports earnings, you may not have the luxury to wait for that to zigzag down. So by next Wednesday, this stock is not likely to be dipping down below that 30 mark. You may have to buy it, mid-range. But I suspect, looking at the way it's peaking here, that this stock will pull back a little bit and give you at least a little bit of a pullback to buy it. That's the way I evaluate it. I also look at the 5-year view, particularly when I'm looking at earnings. And here again, you can see that for the most part, this stock over the last 4 years have exceeded analyst expectations. And by dropping down this earnings component of the power gauge rating, you can see it's very bullish. And with most of the factors, they have different weightings, but very strong or neutral ratings. And this stock, as I said, reports July 26th. So maybe we'll just take another quick poll here. You tell me, do you think this stock, looking at the information you're looking at right now, which is the same information the pros have, you could be a Wall Street trader down at 85 Broad Street. Do you think this stock is going to beat or miss earnings when they report? And we'll see how well Josh and I are doing in explaining this.
All right, looks like another mostly one-sided poll so far, but it looks like most of them are coming in as beat. But if you are on the miss side, and it looks like there's a strong showing on the other side, let us know what you think. If you think there's a reason that a DHI might miss earnings, go ahead and chat into the Q&A box. I'm sure there are definitely some considerations that you're factoring in, maybe something that you're not seeing on the program here, but let us know what you think. If you think that there might be a miss, let us know, and that'd be greatly appreciated.
All right, and you can call that out as we go along. That's a great idea. Okay, so when to sell? I'm going to pause here for a minute because I see we're really at our time. If you do have to hop off, this is being recorded, will be sent to you in the morning, the full video. But I can, with Josh, go through our rules with examples. It's going to take another 5 or 10 minutes. So before we continue, We just want to kind of gauge your preference. Do you want us to continue, take you through our rules when to sell with some examples from our own portfolios of when we sold and why, address that timing challenge you all had, or would you rather just skip this section altogether and go to the special offer, which we will give you a special offer at the end. So we're flexible.
Lots of continues. Looks like over 90% saying let's continue on.
Awesome. Oh, that's great. Thank you, guys. That's really nice. Josh and I appreciate it.
All right.
Okay,
All
so there's two scenarios when you sell. Let me back up here a second. There's two scenarios. One is when you're seeing a profit, like with Lamb Research, and you take that profit. And on the other side, you see a breakdown. You see a stock starting to fall apart. And how do you know those signals in time to get out if you're in a situation like me where I swing trading? Well, the rules I have for taking profit are when that price hits that upper volatility band, that white, dotted line. That's a really nice time to say, hey, this may be as high as it's going to go. I'm going to take my profit and be happy. It's overbought. That's that zigzagging pattern, which dips down, or the price spikes after very strong earnings reports. Now, we already covered this in the classic bull, but I'll quickly review it here because this shows a couple of different scenarios for why I sold. So the green is when I bought. This was that very first chart we looked at on the bull side where I bought it back in February. This money flow buy signal triggered. You can see the triangle here. Everything was green, plus it was oversold, meaning it was dipping down here. So I bought it. I sold it up here. Again, taking the profit because it went up against that upper volatility band. You can see it went outside the white zigzag. And that's one of my rules to say, hey, that's a good time to take your profit. So I did take the profit. Well, what happened with this stock, because it was so strong, very bullish, everything, it kept going up and it traded up above that volatility band for a while, but then it pulled back. So I'm looking at the earnings, outlook, did the 5-year view on this, looked at the earnings, and bought it back before earnings because I was so confident with everything being bullish that this was going to exceed analyst expectation, and it did. Spiked up another 10%. So I took a second 10% profit about 3 days later, again when it went outside that volatility band. And then, really to my dismay, it just kept going up, up and up, and it went up even more. Now, it did recently pull way back with that whole tech wreck. Friday, what was it, June 9th or something like that, when all those FANG stocks pulled back and technology, went into kind of a dive. You can see what happened here just by being in that technology industry group. It pulled back as well. This was another great time. I didn't put it on the chart, but I did buy the stock back at 150 when it was right in here going up, and it's now at this isn't a recent chart, but the stock's up now about 164. So, and it's reporting July 26th. So things are looking good for this stock. Another example of when I took a profit, Maiden Holdings. This is an insurance stock that I bought back here on this triangle here. This was an oversold buy signal. This was telling me that it was oversold, meaning it was dipping down. Everything else looked good. This was on my watch list. I overlaid that little bell on my watch list as I do every morning, and saw that it triggered this buy signal. So I bought the stock. This was back in early December at 16. I'd found it on a screener, actually, put it on my watch list. Industry group insurance was very strong. And then I sold it when it hit this upper volatility band. And you can see, this is all I knew at the time. I didn't know about all this stuff on the right going on. But I did know that it was up against its upper volatility band. And look what was happening to money flow. I mean, this is the real tell here. Money flow started to go red. Now, it's perfectly natural to have some money flow go red, as you can see here back in January and back here last August, I guess that was. I didn't know that it was going to lead to a sea of red, as you see here, but I did know a couple of things. A, it was up against that volatility band, meaning it was typically outside of its normal range, and there was a little bit of money coming out of it. And it was also overbought by this circle here. It was zigzagging up. And the power gauge was just starting to turn neutral. So I said, boy, I'm going to take my profit and run. And that's what I did. And you can see literally in a matter of days, they pre-reported earnings. I've never heard of this, but they pre-reported their earnings guidance as negative. It dropped 10% that day. It dropped another 10% when it reported earnings. And this stock is down like 40% from when I sold it up at its high. So this is a really good example of what you can avoid by following these rules. The breakdown has a different set of rules. And Josh, I'll let you cover breakdown. I typically don't get to this point.
You're out by here.
I'm out by here. I'm certainly out before a stock turns bearish. I think in the 6 years, I've maybe owned one stock that's turned bearish because I'm typically out before. But these are the great signs that can tell you a stock is breaking down. Either get out of it if you're long, or, you know, as Josh does, you know, put on a put option. So Josh, I'll let you take it from here.
Yeah, I use these for both of those. I use them to understand when my long positions are turning around so I can get out with a small loss or hopefully a profit, but at worst a small loss. The other thing I do is I actively hunt for these sort of breakdowns because that tells me that I have a trend change and I'm early in it, so I can probably get a nice options trade on it. So what I look for are breakdowns first in the power gauge. That's a leading indicator, and it is an agnostic indicator, right? It doesn't have emotions. It's a quantitative formula. So it's a leading indicator. And when I see the power gauge go from bullish to neutral, especially if it goes from bullish to neutral to bearish very quickly, that's not a good sign. I look for any sell signals, and I'm also looking for where price drops below the long-term trend line or the lower volatility band. So especially when you see these clusters, and you often do see these clustered very close together, that's a pretty clear signal that stock is breaking down, and if you're in it, it's time to hit the exits, and if you're not in it yet, it's probably time to put it in a watch list for a bearish setup down the line. And so I actively look for some of these stocks. If I see this in my long positions, which I have, there have been times where I've owned stocks and I've seen that sort of breakdown start to occur. And when you can get out early in that and keep your losses small, that's the way to have a consistently winning approach. That's why I showed that I wanted to show that testimonial that we had again, because it talks specifically about avoiding some of the losses, and that's what this does for you. It helps you avoid those losses, and it helps you understand. I use a saying, and I often say that investors in the market are like kids at the swimming pool. They're happy to jump in, but they never want to get out, right? They never want to get out. The hardest thing. Yeah, when do I hit the exits? And when to sell, this is like seeing lightning strikes coming right down next to the pool. It's very clear. You get out. It's no longer time to be playing around. And so when you see these breakdowns, hit the exit. So let's take a look at a couple of them, or just one in particular, actually. So this is exactly what we look for in terms of breakdowns. Now, had you bought it on the signal, you would have known to get out fairly quickly. You know, you would have taken maybe a $2 loss on a $78 stock. That's barely anything in the grand scheme of things. So how do we see the breakdown?
Which I did.
There, see, there you go.
Yeah, I did. I bought it at that yellow. I sold it at the
Right at the break.
At the break.
Following the rules, right? And that's why you sold at the upper volatility band, because you're following your rules, and you have rules in the system that enable you to be a consistently profitable trader. And that's what we've been trying to show everybody today. And this is how to know when to get out. And you'll see Sandy identified, because she has access to this platform, that the stock was breaking down. It exhibits all the characteristics. You see it breaks below a trend line. The trend line stops going higher. It's flat. Look at the money flow on this.
Yeah, that wasn't pretty.
Right? And then you'll also see what happened to the relative strength. The relative strength has stopped being strong. At best, we'd expect to see it look like it does in April. That would be at best. I don't trade at best. I trade and invest based on what might be the worst. And the worst is October, November, December is what we see in August, September, October. And that's not what we want. So you can see very clearly this is a stock that's breaking down. This is a stock that I would put on my watch list, because at the next overbought area, you're likely going to have a nice bearish trade. The relative strength will continue getting worse. The power gauge will likely continue getting worse. The money flow looks like it's that's terrible.
Yeah, the money flow is really bad.
This is what we look for. This is what we look for all the time in stocks that are breaking down. They cross over the long-term trend line. They often dip below the lower band. When was the last time this was below the lower band? It was all the way at the bottom back in November. It hadn't even touched the lower band since then. Now all of a sudden, it is not only below the lower band, it's also below the long-term trend line. The money flow has gone terrible on it. The relative strength has gone terrible on it. You just line them up, and then you know, time to go.
Yeah, I took a small loss.
That's good.
Happy to take that was fine. I'm happy to take a small loss than risk anything more. So that's, this is a really good example of just take the small loss and get out before move on. Exactly. Put that money into something else, like a DHI or Lam Research, something that has a more positive outlook.
Absolutely. One of the things that I mentioned at the beginning were the people that I've learned from, that I've been blessed from learning from, like Mark. And he'll tell you, and the pros that I've learned from will tell you, small losses are the key. Managing your risk is a big part of being consistently profitable. And here is a way in which you can manage your risk and keep it small. No one likes talking about losses. I get it, right? But you're not always going to have winners. So when you can get your winners big, like Torsten and our subscribers, and keep your losers to be nice and small, that's a really good formula for long-term success. So
yeah, absolutely.
And this is and these indicators tell you how to do that. And so there you go. Now, Anil is one of our subscribers. I talked to him not too long ago, and he took Sandy's rules and applied them. And look, I mean, look at this. He sent this right into us. He said, "Hey, look at the results that I've gotten on my test portfolio using your rules." And I'll be frank, it doesn't shock me. This is wholly expected in my mind. 23% profit in less than 3 weeks, maybe not expected, but for him to have improved success using a system that gives you clear entry and exit points, that's the holy grail of trading, honestly.
That's what you want. Yeah, exactly. That's what you want.
Yeah. I don't know how to put it any more clearly than that. So that's Anil.
Awesome.
Sandy, why don't you recap?
Okay, so we made a promise to you early on that we would give you the methodology to invest profitably by doing these 4 things: giving you tools that you can trust, that's the Chaikin Power Gauge rating in the platform; knowing where a stock is headed, that's identifying that classic bull pattern; knowing when to buy and sell, that's using the signals as well as that overbought, oversold indicator; and how to create high probability option strategies, and that's using Josh's rules and the bearish, the classic bear, in addition to the options play overlay. So the promise we made was that we would show you how to predict where a stock is headed and know when to buy and sell. And I hope you'll agree that we covered that with the information we've just explained. And all this is so that you can make more money in the market with less risk, as Josh has just emphasized, which is really critical, with less risk, and have some money to take on celebrations. Celebrations for us are vacations. Celebrations for you may be a new car, a vacation house, whatever. But think about where you want to spend those profits, because that really, as Josh says, this is really it's a fun exercise. I used to just dread thinking about money and how to invest, and now I totally approach it with pleasure, because I honestly have fun investing. So make it fun for yourself. Think about where you're going to spend some of that money, and then set out and follow these rules, and use the tools, and you'll get there. Another market expert, John Malden, uses the power gauge rating, as do his analysts, so they don't trade a stock or recommend it to any of their million of subscribers unless they vet it first with the power gauge rating. So it's not just a system that we're using in-house here in Philadelphia. It's really gotten universal appeal. And I told you that we would be making a special offer to you to use the Chaikin Analytics platform. One more kind of feather in our cap is that in May, we were awarded by Benziga at their Global FinTech Awards. We were awarded the Best Stock Ideas Platform, which is really pretty cool, because there were 18 other companies all contending for that. And we won it based on our platform and tools that we give you. So we've pretty quickly gone through a lot of these features, not all of them, but the screener we certainly touched on. We touched on Josh's overlay of the options play, 20-factor model, the power gauge rating. We certainly discussed that. We did not discuss the stock discovery engine, but this allows you, like Pandora or Netflix does with movies, it allows you to seed a stock and then get ideas that are similar to it. And that's really what got us the award with Benziga. We always like to make a special offer to our webinar registrants, and particularly those of you who've taken the time to listen and take your valuable time to share, our knowledge with you. So we're taking $200 off the subscription, but we're really going to sweeten the pot here. So if you'll stay with me, we will make you a deal. We'll make you a deal you can't refuse. So in addition to all this, you get the one-day view, which we didn't really overlay, but like I use it, and I'm sure Josh does too, when you're timing in that day, when you're going to pull that trigger, the one-day chart is really helpful. The earnings feature, certainly we've talked about, and of course the market insights, which gives you those market commentary and some great ideas. I highlight the one-on-one coaching because, and actually everything on this slide, small group tutorials, unlimited coaching and support. This is really our secret sauce, because our success depends on your success.
That's right. Can I chime in? Do you mind, Sandy, on this?
Absolutely.
Because this really is,
this is your baby.
This is the department I'm in with my colleagues, Joe, not just Joe and I, there's more to the department than that, but Joe and I are a part of the client success team. And there's a reason it's called the client success team. Our success depends on your success, and we really are dedicated to your success. And to do that, we put out a lot of content, subscriber sessions, small group tutorials, and we have unlimited coaching and support, which includes one-on-one coaching. Just today, I was on the phone with a gentleman who is doing a new style of options trading, and I helped him understand exactly how to pair his style and what he was looking to do with Chaikin Analytics in the options market. I've been doing it for a very long time, and I'd be happy to do it with you. You could be up and running in our small group tutorials. You could be on an onboarding session tomorrow, and if you trade options or are interested in learning it, you could be in a subscriber session on Wednesday to start learning options. We're going to be doing the basics on Wednesday, and you could be on a one-on-one call with myself or one of my colleagues, very knowledgeable about options next week as well. I mean, we really are dedicated to your success. It is my baby. I'm very proud of the work we do here, and I don't think people understand how much support they have to go along with the platform. We weren't able to show you everything on there today, but I guarantee you when you subscribe, we walk you through the whole kit and caboodle, everything, and we make sure that you understand exactly what you need so that you can get up and running as fast as possible. Your success is my success. I mean that genuinely.
We all mean that at this company.
Yeah, your success is our success.
Yeah,
but I take it personally, Sandy.
Yeah, I know you do. It's great. That's why you get all those wonderful testimonials. So I told you we would sweeten the pot. We're going to take an additional $100 off when you subscribe by midnight tonight, and you can do so by calling the phone number that you see here or emailing us. We have customer success associates waiting for your call. If you have questions or want to speak to somebody, you can do that, or you can order online. And for the first 10, we're going to give you an Amazon Echo Dot. Do you all know what that is? It's so cool. You ask Amazon a question, like what's the weather today? And it'll tell you, what's the weather today in Philadelphia? Well, it's blah, blah, blah. Very soon, you're going to be able to say to your Amazon Dot, Alexa, what's the power gauge rating for, Google or Apache or whatever, and it'll give you an answer. Power gauge rating for Google is bullish. So that's going to be coming very soon. And if you want to get an Amazon Dot so you can have it to play with before you can even ask it about the power gauge rating, be one of the first subscribers tonight, and it's yours. So I think I'll turn this back to you now, Joe, to just kind of wrap up. But wow, what a great afternoon. I've really had a lot of fun. I know Josh has too.
Oh yeah, a lot of fun. I really enjoyed this. Thank you, Sandy.
Well, thank you, Josh, for sharing the stage with me. It's been a lot of fun, and I hope we'll see you on the next onboarding session as early as tomorrow.
All right, everyone. Well, thanks so much for joining us. Again, as Sandy's offer here, Sandy and Josh both offer $1,650 for a full year to Chaikin. That includes all of those group sessions that Josh mentioned, as well as one-on-one sessions. Our next one is tomorrow at 2 o'clock Eastern time, so do please be sure to join us. Make sure to take advantage of getting one of those Amazon Dots too. We have a few of those here in the office, and they're pretty fascinating, a lot of fun to play with. So again, if you're one of the first 10, you will be able to take advantage of that. Plus, of course, the $1,650 offer. So don't forget, this webinar has been recorded. We're going to send it out tomorrow. In the meantime, everybody have a wonderful evening, and we will see you tomorrow on the onboard session.